Meta. What? Why? I'll never understand that one. The Facebook has done it again. In this video, we will be covering some very fascinating and amazing facts about Facebook that most people are not aware of. The second segment of this video, we're going to look at some financial fundamentals. This will give us our reason why we want to be invested in this company. And in the third segment of this video, we are going to look at some of the charts, and we're going to look at some technical analysis to see when to buy into this company. So we're not just guessing. We're going to use successful, proven strategies on how to invest in the stock market at the right price. I've been trading and investing in the stock market for over 25 years now. I respect your time. From dorm room to digital empire. In 2004, inside a Harvard dorm room, a small idea began to take shape, an idea that would redefine how billions connect. This was the birth of Facebook. Mark Zuckerberg, a 19-year-old sophomore, along with co-founders Eduardo Severin, Andrew McCollum, Dustin Moskovitz, and Chris Hughes, launched the Facebook on February 4th of 2004. Initially, it was just for Harvard students, a digital yearbook where classmates could share photos, interests, and messages. But the idea spread like wildfire. And by the end of 2004, Facebook had over 1 million registered users and had expanded to universities across the United States, heading towards the entire planet. That's right, going global. In 2005, the company dropped the word "the" and simply became Facebook. The platform opened to high schools, then to anyone over 13 in 2006. The walls of exclusivity crumbled and the world began logging in. The introduction of news feeds in 2006 changed everything. For the first time, information flowed constantly, a live stream of friends, updates. It was the heartbeat of the network. And by 2009, Facebook was the most popular social network in the world. The like button became a cultural symbol. Mobile apps brought Facebook into everyone's pockets, making it a part of daily life. Now in 2012, Facebook acquired Instagram for $1 billion. 2 years later, it bought WhatsApp for $19 billion, expanding its reach to over 1 billion more users. That same year, Facebook went public, raising $16 billion in one of the largest IPOs in history. Facebook wasn't just about friends anymore. It became a marketplace, a live streaming service, a news source, and a business hub. Messenger evolved into a standalone platform with payment features and with Oculus VR. Facebook took its first steps into virtual reality. In 2021, Facebook made its boldest transformation yet, rebranding as Meta to focus on the metaverse, immersive digital world blending work, play, and social connection. This move caused complete chaos, and the stock price suffered devastating losses for many months to come. Ultimately, did recover and is trading at all-time highs. Today, Facebook has over 3 billion active users. It powers global communications, drives social movements, and fuels business growth worldwide. But it also faces challenges, from data privacy concerns to responsibility of moderating content for billions. The United States government needed to get involved to make sure that Facebook was following the proper guidelines to protect our personal information and our identity. From a Harvard dorm room to a trillion-dollar tech empire, Facebook, now Meta, has reshaped human connection. And as the digital future unfolds, its story is far from over. This is not just the story of a company. It's a story of how we connect, how we share and live together in a global society, how we stay in touch with family and friends from all over the world in the age of social media. Let's take a look at some of the fundamentals of the company. This is our reason why we need to be highly invested in this company. Meta Platforms, also known as Facebook. Today is August 7th, 2025. The stock closed today at $761 and change. We're going to look at the market cap is 1.9 trillion. The current average daily volume is over 12 million shares traded per day. The current PE ratio is 27, and they do pay a little bit of a dividend yield. Let's take a look at the financials. When we look at June of 2024, the revenue was 39 billion. The net income was 13 billion. billion and change. When we fast forward to June of 2025, the revenue is 47 billion and change. The net income is 18 billion and change. With this revenue here being 47 billion, we have a year-over-year increase of 21%. That's pretty substantial. Our operating expense is 18 billion. That's a 9.86% increase year over year. The net income is 18 billion. That's a 36% increase. We have the net profit margin at 38.59. That's 11.98% increase. Then we have earnings per share at $7.14. That's a 38% increase. These numbers look extremely well. Going forward, it's going to be hard for a company this large, almost $2 trillion. It's going to be hard for it to move the needle. It will be a solid investment. You can still make decent money with this company. If you own the QQQ or the S&P 500, you already own this company. Let's take a look at the charts to see when is a good time to invest into this company. For more analysis like this, subscribe to the channel. We will keep you informed on the latest, greatest companies to invest in. We are looking at Meta. This is the close of August 7th of 2025, 761.83. This is where we currently close. This chart is a 20-year monthly chart. So 20 years ago, if you would have bought this stock for $17.55, it reached an all-time high of $784. You would have made a boatload of money with this company. We're going to get a little more granular and pull into a 1-year daily chart. Each candle represents 1 day. Now what we want to look at are these moving averages. The white line is the 10-day moving average. The purple line is the 21-day moving average. The green line is the 50-day moving average. And this red line is the 200-day moving average. And why this is important, look how the stock respects the moving average when it's in a bull phase. You can see for the last several months it's respected the 10-day moving average, and it occasionally breaches it and touches the 21. Now we've had a breach and it came down and it tested the 50-day moving average. So the stock looks really good. The stock looks really healthy. We've had a nice little run here for the past several months. The stock is currently extended. When do we want to buy into this stock? We are going to zoom in a little bit closer. These gaps, I do not like these gaps. If the stock ever gets hammered and we go into a recession, or if the market crashes, which it will, we just don't know when that's going to happen. So you want to make sure your financial house is in order, and you want to be invested in the S&P 500. That'll give you 500 companies. The NASDAQ 100 is going to give you 100 companies. That's how you want your portfolio built. Now, if you have that in order and you're maxed out on your 401ks and your Roth IRAs, and you have a 6-month emergency fund in place, and you want to buy individual stocks, well, you certainly can, and so that's what this is about. But we are concerned with these gaps because when the market gets hammered and this stock pulls back, it can certainly go to these areas. I don't think this is going to happen anytime soon, but we just never know what the catalyst is going to be and when it happens. We have another gap here. There's a couple of ways to play the gaps, and one of the ways, because if you waited for your pullback here, what you want to wait for is this gap to get filled, but these gaps never got filled, and this stock left the train station without us, and we're all the way up here. So what we want to do is we're going to scale into this. The proper way is to come in at a 25% scale in. So for example, if we're going to take $10,000 and scale into this stock, we're going to take our first position is going to be at the 10-day moving average, which is currently trading right here at $748.59. This is going to be our first scale in. Currently extended above that, so we cannot buy into this. And these numbers do change daily. Then our second level of scale in is going to be at the 21-day moving average, which is going to be $733.39. We can set buy orders at these levels, but what we want to look at is this number right here, the 722.43. That is going to be a level of entry, and this 699.91. So essentially, if I was going to buy into this stock at this particular time, now this would be for trade. If you have something you would like to share with us, please leave a comment below. We want to hear from you. I put some links in the description of trading platforms and financial institutions so you can set up your account and start building your retirement portfolio for your future. Always remember that the markets are very risky, and the key to success in this industry is a well-balanced portfolio. So please remember to do your own due diligence, Dot your I's, cross your T's, and don't forget the Z. God bless and happy investing.